If you struggle with taking bad trades, FOMO trading, revenge trading, then this is the video for you, because in this video, I am sharing a very simple SMC entry confirmation rule that is both simple and mechanical that's going to help keep you out of trouble and make you a better trader. So if we haven't met yet, my name is Justin Bennett, Forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So looking at the Australian dollar 1 hour time frame, this is the time frame that I prefer for looking at market structure. And that is the very first thing that we're going to talk about. So my rule whenever I'm trading is that I need conditions in my favor. That's it. Very simple. And really, you can make this multiple rules, but my rule is that I need these 4 conditions in my favor. That is it. If one of them is not present, then I do not trade. So it's really that simple. Again, this is very mechanical. There's no emotions involved here. So the very first rule is going to be structure. All right. Now, when we talk about structure, again, I like the 1 hour time frame. You can use any time frame you like. Just keep in mind that the lower the time frame you go, the more noise you're going to get on the chart. So here we can see we are making lower highs and lower lows. Now, if I play this forward here, you're going to see something from the Australian dollar where we get a change of character. Now, I want to point something out too. You might be looking at this move right here and thinking, how is this part right here any different from what we saw on these highs? Well, I'll show you. So if we look back here, this right here, you can see we got a break of structure below these lows. Now, what makes this different from what we saw earlier? Okay, so you can see the lows down here, we did get a break of structure below this. Now, what makes this different though from previous price action is that you can see the internal highs that built through this area. Okay, so notice how we had this high here and this high. We swept both of these. We took internal liquidity and then we formed, okay, the break of structure. So that makes this right here an external high. So this external high getting broken is our change of character. Okay, so let me map this out and I'll show you how this is different from what we saw earlier. Now, this is a little bit of a lesson on market structure, but I do think it's important to understand this before we move forward. So if you look back here, the difference is that this right here, okay, is your internal high, right? Internal liquidity formed through here. Now, this was taken on this high, and then we did get a break of structure, right? So this is also our external high. So the point here is that this was not an external high, so this was not a change of character, right? This move above here was not a change of character. So the same thing over here, we had internal liquidity building here. We took this out, and then we had a break of structure, okay? So this right here, once again, external high up here, external high up here. Same thing over here, internal high, liquidity getting taken on these highs. So all of these highs up here are external, meaning that the close above, highs like this, all of this right here is internal. This is internal, this is internal, and this is internal. So none of these highs over here were a true change of character because all of them were dealing with internal highs, breaking above internal highs. This over here, we have the internal highs over here, right? Internal liquidity building. We took both of those. We then had a break of structure. If we track this back, this is our last high. So this right here is our confirmed change of character. Okay, so when we talk about structure, this is what I'm talking about. We need to have the trend in our favor. And in this case, because we have a downtrend and then a bullish change of character, this is satisfying that rule, okay? So let's play this forward now and see what we get here from the Australian dollar. Now you can see that there's no question that this is a change of character. I mean, not only did we take out this high right back here, but we also took out multiple highs, including this one over here and this one here. So a very different look than what we've seen over the past few weeks from the Australian dollar. So the next thing I do here is I look at the pullback here and I need an area of interest, okay? So area of interest. All right, so this is the part that gets really, really mechanical. And I'm actually going to move this back a couple of candles just to kind of show you, just to make a point here, because what happens is traders tend to get in this mode of they see this move right here and they think, okay, well, what if we only pull back to here, right? I don't want to miss this move. So I'm going to be a buyer through here and look for longs in this area. And then hopefully we get the bounce from here and the continuation, right? Because they don't want to miss the trade. And this is where FOMO comes into play. Now, the way that you avoid FOMO, though, is having a mechanical rule like that of OTE. Now, what is OTE? OTE is optimal trade entry. Okay, so that is this right here. I have a modified fib. I'm going to put the settings up here on the screen. You can pause the video, take a look at these, copy these, and use them in your own chart. But what this shows here is that this up here, everything in red is considered premium. Okay, now because we have a bullish change of character, I want to buy in discount. I want to buy below the 50% line, which means down here in this green area. Okay, so this darker green area is what's called OTE or optimal trade entry. That's the area between the 79% pullback and the 62%. So this is the area that I ideally want to be looking for longs. And the key to this, okay, and this is very, very important, the key to using OTE like this, or even premium and discount, is that you want to be measuring from external highs and lows. That is it. You want to be looking for the external low down here, external high up here. If you're trying to do it in internal highs and lows like this, then you're going to get chopped up because this OTE area is going to give you false signals. Okay, so external highs and lows only, that is very important when working with premium and discount and also OTE. Okay, so this is my second condition, right? And again, the great thing about this is that it's very mechanical. There's no decision making here. The market is either below this 50% down here in this green area, or it's not. If it's above this, then I cannot long because I don't want a long high. So again, there's no emotion here. There's no even decision making. It's just a matter of drawing this out and just saying, okay, here's my 50%. I need to see the market come down here. If it doesn't come down here and it just does this, then so be it. I missed the trade, okay? And keep in mind too that I watch multiple charts. So I'm watching the euro, the pound, the Australian dollar, the S&P 500, even gold. So if one of these charts is showing me an entry, then I take it. If not, then I pass. And we can go days or even potentially a week or two without an entry, and that's okay. But this is how, when you're trading SMC, you filter out the bad trades, okay? So this is my second rule here, area of interest using OTE. Now, the second thing I'll do before we move forward here, the second thing I'll do is look for FVGs down here in this area. And again, we're just building the story here, okay? That's all we're doing, is we're building the story and we're looking for conditions to be in our favor, right? So if I look back here, we can clearly see here on the daily time frame that we have an FVG off of this high. Okay, so this over here is going to be our FVG. That's a daily FVG. And then we have this level here as well, okay, right at the 50%. But again, this doesn't matter. I'm not going to mark this out because it's right there at the 50%. So even if we come down here and satisfy this FVG off of this high, it doesn't matter for me because we're still in premium. I can't long up here. Okay, so this FVG down here off of this high is the only one I'm going to pay attention to here. And also the fact too that this is technically a valid order block on the daily chart as well. So you can see here we have black to white, okay? And this right here is our order block here off of this black candle. So multiple things happening here. We've got the FVG, we've got this order block, we've got the bullish change of character. And now I'm going to drop down to lower time frames to see if we have any additional FVGs to help frame this area of interest down here. Okay, again, we're just framing the story. Okay, we're just looking for imbalances down here that could become targets. Now you'll notice that this right here would be an FVG off of this high, but we had this wick right here. So that's technically not an FVG. Now, I also like to look at the 15-minute time frame just in case. Okay, because a lot of times you will have FVGs that line up within that OTE area to help kind of give you a little bit of context. And you can see that right here, we do have an FVG off of this high. Okay, so right here off this high, if I draw this out, right here off of this high. Now you can also see where this was clearly a pivot for this market. You can see the highs through here, we broke out, and then we had the market return to this area, but we do have this unmitigated 15-minute FVG down here. Okay, so again, when we look at this here, let's zoom back out to our 1 hour time frame and take a look here at our area of interest. Okay, so we have our OTE drawn, we have that daily FVG here. I'm going to change this to an FVG as well. Okay, in fact, let's make it the same as this one up here. Even though this is a 15-minute, we're just going to keep them both labeled as FVG. Okay, so let's go back in here to our 15-minute, make sure we have this lined up correctly. Okay, so once again, moving in here, we can see that off of this high right here is our FVG. All right, so perfect. Now we have this area of interest defined. Okay, so now it's just a matter, guys, like I said before, of is the market in this area or not? And if it's not, then I do nothing at all. Okay, I just sit back and wait. I look at other charts, I trade other charts. But as far as the Australian dollar goes, I am not interested in this market until we get down here. If we get down here, again, there's no guarantee that we do. Okay, so if we go back to a 4 hour time frame, just to kind of show all of this on the screen at one time. All right, let's see what we get here. So again, area of interest, this is all part of our area of interest. Keep that in mind. The OTE, the FVGs, all of this is just developing an area of interest to watch for longs. Okay, so right there, we tap into our OTE. Okay, now at this moment, what I'm doing now is I'm going to drop down to a lower time frame, and we're going to call this LTF, lower time frame confirmation. Now, what does that mean? Lower time frame confirmation simply means that in this case, I would drop down to a 5-minute time frame, and you can make this whatever you want. If you're on a 15-minute time frame for market structure, you could drop down to a 1-minute time frame if you want. Just keep in mind though, like I said, the lower the time frame, the more noise you're going to have. So for me, if I'm on an hourly time frame for market structure, I like dropping down to a 5-minute to look for a bullish change of character. So the bullish change of character is exactly what we did before, right? So you can see here that off of this high right here, okay, so we have the break of structure. Again, we're on the 5-minute time frame now. you can see right here, we have a break of structure to the downside. That means that this up here is my high. Now, remember what I said earlier at the beginning of this video about how an external high or low must take internal liquidity. Okay, so there must be internal highs or lows in order to make something external. And with that idea in mind, look at these highs right here. Okay, we had internal highs right here. We had the market take that, and then we had a break of structure. That means that this up here is my external high on the 5-minute time frame. So that is very important because that means that as of right now, this is going to be my high right here that I need to see the Australian dollar get above. And all I need to see is one 5-minute close above. That is it. For any change of character, you just need a candle closing above or below that level. That's all it has to be. Okay, so wicks don't matter, but you do need at least one candle closing. Okay, so again, this is my FVG down here. This was the 15-minute FVG. Just kind of recap, this up here, this FVG was our daily. This one down here is the 15-minute, and you can see we tapped right off of that. So I have confidence now knowing that our FVGs have been satisfied. We're in OTE, and I have my high marked out here on the 5-minute. Okay, so if we play this forward here, you can see some consolidation from the Australian dollar, and then we get the push into this area. Now, at this moment, okay, right here on this close, this is enough. Now, this might look very marginal, and it is, but this close is enough for me to call this acceptance above this high and this a change of character. Okay, so as soon as this happens, I am looking for longs. Now, here's a very important part that I want to point out because this is also where traders get tripped up. They think that, okay, well, we have the change of character here. Should I buy now or should I wait? And here's how I approach it every single time. What matters for me, and actually I'm going to label this as our change of character because that's what it is now. Okay, so 5-minute change of character right there. Now, for me, what this comes down to, whether I look for longs off of this change of character or I wait for a move down here. If this price action had been just straight up through here, right? And we had, 2 or 3 5-minute candles straight up, FVGs down here in this area on the break, then I would be looking for buys down here against those imbalances, okay? Very simple. Now, in this case, we don't really have anything obvious here. There's really nothing obvious on the chart where we got displacement out of this for me to then target, for a long against those imbalances. And furthermore, too, this is also very important. Now, this brings us to our fourth condition that has to be met for me to take a trade. So let's go out here to our hourly time frame and find our rules here, okay? So for me, the fourth rule is going to be, we're going to call it 3R plus. Now, what is R? R is a R multiple. All that means is that my reward must be at least 3 times my risk or better, okay? So 3R, it could be 4R, 5R, you can develop this on your own. I do recommend, though, in my experience, the best thing is at least a 2R, but really preferably a 3R, especially if you're, swing trading the 1 hour time frame, 15-minute time frame, whatever it might be. I have found that the 3R or better is going to help keep you away from needing that really high win rate to be profitable. Okay, so looking here at the 1 hour time frame, again, we have our 5-minute confirmed bullish change of character, right? So I'm actively hunting for longs right now, and there are no obvious, sell side imbalances. I mean, you can make the case this down here. But in this case, though, because there are no obvious sell-side imbalances, and also the fact that, keep in mind too, when we look at the hourly time frame, right, this is my current range, okay? This is my current range. We had the bullish change of character on this move up, and this is now my range. We have the high up here. We now have this low down here. So when we talk about a tradable range, this is what I'm looking at, okay? And this is sizable. From this low down here all the way up here to the high, there's a lot of room to work with up here. So for me, what this comes down to is at this point, I mean, keep in mind too, we've waited days for this to set up. And this, again, goes back to, you can use any time frame you want. You can be on the 15-minute, the 5-minute time frame to do all of this and get more opportunities, but you will get more noise. And also the fact that I look at multiple markets, it's not just about the Australian dollar. But the point here is that we've waited days for this pullback. I don't want to miss this, right? And yeah, sure, a little bit of FOMO comes in here. However, at the same time, it's all rule-based because for me, the rule here is if I can squeeze out at least a 3R from this 5-minute entry down here to my stop loss below the low, and this high up here, remember, this is our external high, right? This is my range high. If I can squeeze out at least a 3R trade here or better, then I don't care about looking for an entry down here. I mean, sure, you can squeeze out another, 2R or something like that, but at the same time, you don't know if the market's going to pull back. It could give you that 5-minute change of character and then just take off without you. And if you've waited days or a week for this to set up and that happens, it's gut-wrenching and we've all been there. Okay, so very simply for me, when I'm looking at this, I'm saying, okay, we have the 5-minute change of character. If I can get a 3R here, let's see if we can, with a long position right here off of that 5-minute change of character and a stop loss below the low. and my stop loss is doing its job. It's protecting my capital, but it's also going to prove me wrong if we take out this low down here, because we've had that 5-minute change of character. We're in the OTE. We've taken out both FVGs we marked out. So I know that if we come here below this low, that this idea is invalidated, right? And that's enough to get me out. So I'm happy with that right there. This right here is, let's see, about a 27 pip stop. So on an hourly time frame, 5-minute time frame, that's great. I mean, I'm very happy with that. And if we go up here to the highs, okay, you can see right there, that's about a 5.7 R, meaning that my reward is 5.7 times my risk. So if you're risking $1,000, then you're going to make $5,700, right? And that is more than enough to get me in. So in this case, I'm not looking for, on the 5-minute time frame, I'm not looking for anything down here, because again, I don't know if that's going to happen, and I would hate to miss this after waiting days and days and days for this to set up. Okay, so I'm sure a lot of guys out there making these videos in hindsight would tell you, oh yeah, I'd wait for the move down here to get in. But look, in reality, if the markets were real time, you don't know if you're going to get that or not. Okay, so let's move back here to the hourly time frame and play this out and see what happens. Okay, so we have all of our conditions met, and again, this is my number one rule when trading SMC, looking for that entry confirmation. Okay, so if we'll play this forward, you can see we did get a little bit of a dip here. So again, in hindsight, you could say, well, I want to enter down here. Yeah, but you don't know that at the time. Okay, so playing this forward, you can see we're back here to the entry. We come up there, test that former FVG that was mitigated. And from there, we get some consolidation, come back to our entry. And then from there, we get a massive move here from the Australian dollar back there toward those range highs. So right there, the market would have hit our profit. And of course, this move right here, you're not always going to get the market moving that aggressively in your favor, but in this case, it worked out beautifully. So you can see how all of this was very mechanical. There was no decision-making involved here. The most decision-making I had to do was deciding if I was going to enter on that 5-minute change of character or wait for the pullback. But again, knowing that I was going to get a 5.7 R out of this, or my reward was going to be 5.7 times my risk, it didn't matter. I wasn't looking to squeeze out a few extra pips here. I just wanted to get in, get my stop loss set, and get my take profit set. And in this case, it worked out beautifully. But all of this is very, very mechanical. So the 4 conditions that I need to have set, this is my number one rule, is I need to have structure, area of interest, lower time frame confirmation, and at least a 3R trade or better. And I know if I do these 4 things over and over and over again, that I am going to be profitable. Now, of course, this is going to weed out a lot of trades, and that's kind of the point. This is filtering out the bad trades. So when all of these things come together, we get what is called confluence. So down here, we're going to put confluence because that is the name of the game. The more of these conditions you can put together, the better off you are going to be as a trader, the more profitable you're going to be as a trader. Just keep in mind, the more you add to this, of course, you're going to filter out more and more trades to the point where you might not get that many setups per month. But this right here, these 4 conditions, at least for me, with the charts that I watch, is plenty for every single month, getting a few quality setups. And that is the key, is filtering out the bad ones and only taking the very best trades. So if you found this video helpful, be sure to subscribe to the channel, and also check out this video right here, because it's going to show you how to read market structure using breakup structure and change of character in simple terms. Until next time, trade well out there.